Good afternoon, everybody. It's Kevin here. I'm here with Machiel. Scott is not on the webinar today. He is on a plane on his way to China for our China launch. We're very excited about that. That will be happening on Saturday. We will be launching our China office. How are you doing this afternoon, Machiel?
Very good himself, Kevin. Thank you.
No, very good,
Welcome.
very good. I'd like to just to say welcome back to South Africa to you. You guys had a fantastic trip. A lot of people who were on the webinar today would have been following the trip using the WhatsApp group and the digital buyers tour, so have seen quite a lot of information from both a commercial and a residential point of view. Of course, today's webinar is going to be about commercial, but how was the trip? I mean, really great job you guys did in terms of documenting that. Just like everybody who's on the webinar, just to, if you have any questions or any comments to make, it is always better when it is a bit interactive as opposed to us just talking to our computer screens. So if you do have questions during the webinar, please post those up. So yeah, Machiel, how was the trip?
Yeah, thanks, Kevin. I think while we wait for the guys to get on board, we had, for the first time, we had the residential and the commercial running in parallel. And yeah, I think the digital buyers tour was a great success. We had fantastic feedback from everybody, and I think the message that we got is you guys are doing so many things, I would like to participate in everything. And my message to that is really today that I'm going to try and give a bit of structure to the commercial side of things. We've got a full team of asset managers which are ready to help, and just to give a bit clarity, for people that might feel a little bit overwhelmed with the amount of opportunity that we are presenting.
Okay, yeah, no, absolutely. That is great, and it's awesome to know. I mean that it is extremely structured in terms of where we're going and the opportunities that we are looking at within the US.
Yeah, I think let's just give a little minute or two. I think there's quite a few people that I see that's busy logging on. Yeah, we also, like I said, we had experience with the residential side. So for those that's interested in the residential side, please guys, let us know if there's some of interest. What I can definitely say is that the market is really bubbling. There's a real demand, and because it's bubbling so much, there's also going to be quite a nice capital appreciation. And from that perspective, the investors can definitely win. But we're definitely not going to talk about that today. We're going to really talk about the commercial opportunities. So, yeah, Kevin, I think let's dive in. Yeah, and I'm sure with some more guys coming aboard, we can deal with that. Yeah. All right. So,
Machiel, just so everybody does know, of course, as always, we are recording the webinar, and we will be sending out that recording to everyone who attended, all those who didn't attend. So please share that with people in order to allow them to see these amazing opportunities. So over to you, Machiel.
Yeah. No, thank you. Francis, your question regarding is there going to be a separate residential webinar? At the moment, we have not planned for one. So if you have specific questions, please put that onto the question and answer sheet, and we will address it for you. What we want to do today is really focus a little bit specifically on the commercial opportunities. So I'm going to start off with really just to understand and give a bit through the thinking behind these opportunities, so that I think should be very clear that we've got an extremely structured approach, and we're really using a lot of experience from people that has done investment over 30 years, and what they've used and what works for them as a basic starting point. So I think the question that I get quite a lot is, America is so large, why America, and why and in which states are you focusing on? So before I dive into the states, I think what we have said from Wealth Migrate side is that we're very clear that we are following a diversification strategy. And we are going to be present in 3 markets: the American market, the UK market, and the Australian market. Most of you know that we've been very active in the US market, and then we are starting in the UK market and the Australian market, and I'm going to allude to that during my presentations. But when we started at the market research for the United States, we really started with some very basic criteria. One of the things that we've seen as a major trend worldwide is that because a lot of goods are getting more and more logistically shipped through airports, and people are getting more and more mobile, especially a lot of companies globalizing, it means that the airports is becoming more and more important, and we see there's a lot of growth around airports. Like we've been talking a lot about development and growth trends near hospitals, similarly is the airports, and you can clearly see on this slide here that the #1 airport in America is Atlanta. It's also the #1 most traveled airport in the world now. So that basically means that most of the Fortune 500 companies are locating there because that's easy access to the rest of the world. And for most people that might not know the population distribution in America, is that pretty much on the eastern side of America, there's a very large size of the population. If I'm not mistaken, at least 65–70% of the population actually lives from Texas to the eastern side. So that means that from Atlanta, within 2 hours, you can get to a very large part of the population, and that's why it's so important. It's also important from a Wealth Migrate perspective. That's really, for us, quite a nice entry point because we just have a direct flight there. So there is obviously a little bit of influence of that as well. The second thing that we've looked at is the landlord-friendly states. We very specifically are looking at that in the sense that these are states that protects the rights of property owners. The last thing that we as South Africans want is go to a state again where you have a difficulty evicting tenants. Practical examples of that is, for instance, in New York, which is right on top here. We know of actual cases where the landlord has to actually pay the guys that has stayed in his building to get out of his building. So they almost hijack the buildings on purpose. So that's the extreme cases that we already know of in New York. Chicago is very similar. Los Angeles of California is also the same. One of our colleagues just started, James Chen has also mentioned to me in California, it's definitely a longer time to evict than what our current experience is in Atlanta and Texas. So that's a very important aspect. And then obviously we are looking at the growth areas. So from that perspective, you can see where the growths are. And what we then do is we combine all of these factors. Well, before I get there, we combine all of these factors into one graph. But one of the states that's really standing out for us at the moment is Texas. It's very, very clear that Texas is really the fastest growing state in America. Most of the top 8 to top 10 cities in terms of growth-wise are in Texas, and very specifically the 3 cities which we call the Texaplex. So if you look at the screen, you will see Dallas and Dallas-Fort Worth. If you see on top here, Dallas-Fort Worth is pretty much like Pretoria and Midrand. It's really two areas which has actually grown into an absolute large metro. And then below, you would see Houston. Houston is very, very renowned, obviously, as an oil headquarters, but there's a lot of refineries and a lot of sport activities that happens through the sport, which feeds into the America, and that is that. And then the capital is Austin. It's becoming quite a tech hub. It's dubbed the second Silicon Valley, so that is really, really motoring. And then San Antonio, which is just a little bit low here. So this is the Texaplex, and this is really the growth engine, and that's why we are definitely looking in those areas. And you'll see today we're going to definitely specifically speak of opportunities in Dallas, specifically in Austin. We are avoiding Houston to some degree because it is really still not dominating, but it's still dependent on oil. And with the oil price so low, we're not going to really focus onto that until we really understand that. But what is very clear from Dallas and Austin, it's very much a diversified economy, a lot of diversified industries, and less than 10% dependence on oil. And that really makes it for us safe destinations to invest. So that's really why we're dealing with it from this top level down. And then when we combine these things, you will see, if we say landlord friendly, medical research, growth, and the most traveled airports, we can clearly see the states that we're currently focusing on is very much the two growth areas which I've highlighted in this yellow circles, and that's our focus. And so when we know where we want to focus, we then now find the relevant partners in each of these areas, and then with each of these areas or each of these partners, we then find the relevant opportunities. So for those of you that has been on the digital buyers tour, you will see we made a lot of emphasis on showing you who our partners is and actually having interviews with them. And the idea of a partner from a Wealth Migrate perspective is that they are local players, which is a niche player. They have at least 10 to 15 years of experience, and they have the potential of a pipeline of deals. So to build up these relationships, for instance, the relationship in Texas took us almost 9 months to build now, at least 4 trips before we actually did our first investment now. And it takes a lot of time to build this relationship and really to understand that they are say who they are, and that we build up the trust factor on both sides. And obviously that once we've done it, that there is enough deals that can come through the pipeline. And today you will see quite a few of them that we're working on, a little bit more lifting up the bonnet, as I could say, just to show you a little bit of what we from the deal flow side are busy with. Okay, so the next step is, once we know which area, then there's quite a lot of commercial segments, and we've led ourselves a lot by market capitalization rates. All of you know that we're very much bullish on the medical office blocks. So here you can see that the cap rates are fairly low. So for those that doesn't understand cap rates, it means that it is the value of the income divided by the price of the property, gives you a capitalization rate of your income stream. And the lower this value is, the more attractive the segment is. So take example, if you compare now the office secondary, which is here 7.52 cap, compared to the office, which is 6.84 cap, then you can understand why we are looking at this, because it's a little bit more attractive, especially if you look at this analysis, which is already at a 6% cap. And then another segment that I'm going to briefly touch on, which has really drawn our or caught our attention, are the self-storage side of things, which is a very attractive market. Then the other market that's also becoming extremely attractive is the apartment market. In America, they call it multifamily. Multifamily simply means that all the units or the units are on one title. So it's the equivalent of a block of flats in South Africa as we know it. That means that it's not individual units, so it's not sectionalized units is a complete block of flats, and that's what we call multifamily. What this picture shows is the attractiveness from a 9% capitalization rate already for the smaller units, or the bigger units, sorry, the bigger units here is already below a 5 cap. So it means that this is extremely attractive for funds to invest in, and that's why we stayed a little bit away from it. But there's quite a lot of opportunities that's presenting itself. So if we can get an opportunity at a 7 cap, you would clearly understand that that creates a lot of value, because we still have the potential to compress the capitalization rate. That basically means that we can get a higher price when we sell it if we go down to 5% and below. So that's why the apartment or the multifamily area is something that we are really starting to look at. And then our basically our real solid focus is still on the healthcare. I mean, this picture just really shows the clear spanning of GDP. Now, if you think about the huge size of the American economy, this graph clearly shows you that they are spending more and more of their GDP on healthcare. This is also reflecting of their population growth. We actually looked at the aging population, and we saw that the population of 45 plus people are actually going to double by 2020. So a huge amount of aging population, and of course that also needs an increase in medical spend. And then in terms of the medical office vacancy, here you can see the vacancy is systematically going down. So that basically means that there's more and more a shortage of buildings. And as you can see, the inverse curve is happening, that because there's a more and more shortage of a building, the rent is going up. For instance, some of the opportunities that we have been looking at, we're already achieving in the region of 25 to 26% or $26 per square foot. So you can see that if we can achieve that type of rent, then we are definitely already pretty much above the average. And that is the whole idea. Dolph, for those that you heard him speak, we are really following the trends, and we want to beat the averages. And if we beat the averages, then means our results in terms of our projects will also beat the average result, which means it's an exceptional project. So we really are using what we call trend is our friend, that we understand where to invest. All right, so I have a question here. How does the ownership of multifamily investment work if it's not divided in sectional title? It's just that the owner of the block of the owner of the multifamily just are a large investors that just take the whole block for themselves, and they take all the income for themselves. So it's a very stable source of income, and therefore it's very sought after. All right, just a quick history. Our first deal was about 2 years ago. That's really working extremely well. We got our first year result. We actually almost August this year will be actually 2 years that we got this deal on. So pretty much has maintained our results, which is 8.3% paid on a quarterly basis to the investors. Medical 2, this one has really turned out extremely well. We tried to lease up the last building, and we managed to do it on closing. Therefore, that was a nice little kicker. And you can see we projected around about 11 or so, and now the actual results, which is pretty much at the end of March this year, was 11.37%. So we're extremely happy with that. And then the one did in January, the first semi-quarter from January till now, first quarter results already 8.3 exactly as we forecasted. So what we saw is that our conservative approach and how we do these deals with such a lot of safety and due diligence checks is really paying off, so that we don't make mistakes. We're getting checked by a number of people, so it's not dependent on a person, so that we can really ensure that there's no mistakes and we can give a solid return. And as you can think, it's very large pieces of money. So we're sitting all nearly 20 million, oh no, let's say 6 plus 4, it's about 14 to 15 million dollars in equity that we are managing already, and it's very important that we have consistent results. Right, so now the main thing that we're talking about today is really the opportunities that that we saw. The first one that we really looked at is Athens. Athens is an opportunity that presented us ourselves, which is in an area. I just want to go to the next slide. You'll see here, Athens is about about an hour's drive to the east of Atlanta. Athens is also a very large university town. Some of you that heard about the Georgia Bulldogs, that's where they come from. That's their football team. Very large university over there. A lot of students and a lot of medical centers. And that actually serves the northern part of, or the northeast part of Georgia. And that's why it's such a sought after place. So we had a potential to look at these office buildings. This is a developer that has basically developed it, stabilized it, meaning they got rent in. And because they got rent in, they basically would like to move on to the next development, and that's where this opportunity comes from. Typically, the returns are cash on cash here, you would see is about 7 to 10%. So if we can get the interest rate lower, this could be a deal. At the moment, we're discussing the price, which is 12 million. And so they still want a lot more, but from our perspective, we can't offer that. So this is currently in negotiation. We were there. You saw a lot of pictures that we had on the digital buyer strip. Just excuse me one moment. Okay, the next deal that we saw is a medical office block right across the Wellstar Douglas Hospital. It's a medical office block, excuse me, type B. So it's quite an interesting block because it's got such long-term leases in. It is Douglasville, which is just on the eastern side of Atlanta. We've got a lot of residential properties also in that area, so we know it quite well. Sorry, just one second. Sorry, my voice is just going a little bit down. So you'll see it's directly across the hospital here, the Wellstar Douglas Hospital. So again, it's quite nice for us. The doctors that is practicing here are actually working directly for the hospital, some of them, and some of just have their practice nearby. So from our perspective, this is quite ideal. As you know, a lot of times we want to be on or near campus, and that fits that bill again. Just a quick 1 or 2 photos that we saw. So we were there on a Saturday, so it was closed up, so we didn't have a chance to go into it. So very attractive. Also from a debt coverage ratio here, you guys can see almost 2%. Almost 2. That basically means that you can lose half your tenants and you're still okay. So that's very, very nice for us. Cash on cash, also pretty strong here. There's potential to improve here at the back. Equity raise is in the region of 1.5 million, so it's a relatively small deal, but very attractive. So we're just reviewing it with the investment committee at the moment. The deal that we're currently doing, which is currently live on our portal, is the Medical 5 opportunity. We're very, very happy with this opportunity. As you can see, it is a building straight next to the hospital. This building actually got 3 surgical centers or theaters for the Wellstar Hospital in this building. It's a 90,000 square feet building, so it's a fairly large piece of building. And the building is about 25 years old, but the lifts, the air conditioning, everything is pretty much brand new. So from that perspective, it's quite nice that it's really actually inside out new. It's on campus, so and it's also next to this Wellstar Hospital. What's extremely nice about this hospital is that from a balance sheet perspective, it's very strong. So, so we believe it's a very good attraction for the doctors that's working in that building. The area is Marietta. As you know, it's the northern side of Atlanta. It's a very well-off area. It's directly along this I-75 highway. And this highway is quite a major drive-through. It's typically like our N3 going down to the port. So it's a very important area. And they have just moved the Braves Stadium near the Braves Stadium, the huge basketball stadium, is in this area, and they're busy developing it. So it's about a $3 billion development, and that creates a lot of work in this area. This is almost a kilometer away from where the actual hospital and this project is. So it's very much on a growth corridor. This whole northern region of Atlanta, we're achieving the $23 to $27 per square foot, like I indicated on the statistics. So from our perspective, the growth and the long-term growth potential in this area is phenomenal. So that's why we're so bullish about this opportunity, and it can definitely work. Like I said, it's a key surgical area on campus, north side of Atlanta. Brave Stadium is built there. Of course, this is a landlord-friendly state, and our strategy on this building, when we looked at the leases, about 30% are very, very strong long-term leases, and about 70% is shorter-term leases. What we found, the owner of this building really was not looking after it. This is an extremely rich guy. This building is completely paid for in cash, so he didn't really have interest to optimize the building. And with our partner SGA Property Services in Atlanta, we can really optimize it. So from our perspective, it's very, very powerful that we can actually add value to this. I see a question here on the liquidity of 15,000. We definitely have added the Route B, as we call it, from our platform. So yes, we can invest $15,000 at the moment. So for us, this is quite a major milestone that we have achieved. That means that existing investors with existing LLCs can continue like we did previously. The first investment in a new LLC is $100,000. The reason for that is that the LLC cost per year is around about $2,500. And if you get an 8% return on 100, it's about 8,000, and then you're left over, say, with about 6,000. That makes sense. If you have already done investments, you can do lower amounts. So these minimum amounts on the Route A is really just to help investors not investing in it and then the cost drain their income. In the Route B, we have created a platform where we actually buy into a share of a company. This company share acts as a single investor into the existing investment in the United States. We also have tax optimized it with some tax consultants in Atlanta, where the money moving out from America, we do pay the withholding tax already. And that means that when it comes onto the platform, it will be in the form of dividends. So it means that the tax burden has actually been taken care of. And as a result of that, it's actually quite efficient. So, yeah, from that perspective, I think from my side, it's a very attractive investment. We're going to hold it for around about 5 years. That's our current plan. And then investors have to effectively choose if they want to stay in or continue. And yeah, the pledging phase of this project is currently underway. So if you log into our Wealth Migrate platform, you will see it there. And then please pledge your interest if you're interested. Once we are ready with capture, we are going to actually switch it over into investment mode, as we call it. And then you have to do your actual investment either through the route A or the route B. So Kevin, I think it would be opportune that we maybe just ask on a poll, if there's people interested on this. So please, guys, for those that are interested but are not sure yet, let us have a quick talk. Don't let these opportunities pass you by. The market is definitely tightening up. So these opportunities are going to get rarer and rarer, and we have to take advantages of that. So let's just see, Kevin, just have a quick look, if there's quite a few guys polling on that at the moment.
Yeah, Machiel, at the moment, about 40% of people have filled in the poll, so we'll give it another few seconds and then we will close the poll. So if you want to give your option, this really just helps us to help you, and then that's the reason we're doing it, so that we know we can make sure that we are speaking to you and giving you the best info. So thanks very much to everybody who's filling it in.
Okay. I think the other thing that I want to say about our platform is that it's a bit of a focus for the smaller guys that just have 15,000. But what I can also tell you very clearly is that if you have an offshore structure, it's actually very much to your advantage actually to do a very large investment through the platform as well. The reason for that is that if you got your money offshore in an offshore trust or offshore company, you can invest directly from the offshore company into our offshore platform, and that is really quite a good advantage for you. First of all, obviously, you don't have to set up the structures. The yearly how can I say, the yearly tax is paid on your behalf, the yearly auditing is done on your behalf. So from our perspective, it's quite a lucrative and easy thing to do from your perspective. Kevin, I just want to make sure, is my main screen back?
Yes, Machiel, it is.
All right, so let's go on to the next deals. Like we said, we are really bullish about Austin and Dallas. So we found the first partner there. It is called Hattrick Developments. For those you should have seen on our stuff, we had an interview with Rick Benson, the potential partner there. He's a developer owner, and he's also a sponsor for us. That basically means he would stand surety for the debt, which is quite an important criteria for us. So from our perspective, this deal is in the pipeline, and we definitely think after Medical 5, most likely this would be our next opportunity. For those that has already invested in Atlanta area with your LLCs there, you can simply invest in this opportunity as well from your Atlanta or your Georgia LLC into that. Doesn't really matter in which state your LLC is. You can use the same LLC. We had that question quite a few times already. Yeah, this opportunity is really with 2 new buildings. about 44,000 square feet. The returns are pretty okay, about 9% and 15%. So it will just give you a diversification into the state of Texas. In this specific case, Austin, which is the capital of Texas. Where is it located? It's pretty much on their main highways, the 290 and the 95 on that corner there with Elgin. That's if you see my cursor over here. This is pretty much on the eastern side of Austin. And there's a lot of expansion in this area, so it's really on the proverbial edge of urban development. And there's a lot of new developments coming in, so it's really ahead of the curve in terms of that. So location-wise, we're fairly comfortable. Austin is pretty much the number 2 growth city in the country, depending on which polls you're looking at. It's either number 1 or number 2, so it's by far the hottest place to be in the United States at the moment. And you know, we're just very fortunate to at least have a shot at due diligence. The occupancy of this properties is 93%. So what's very nice about that, the occupancy is 93%, but the developer has actually given us discount because the properties are actually in process of getting leased up to 97%. So we're buying at 93, and hopefully we can add some value already from day one. This is the second building that's part of that. It's a plastic surgery and the ear, nose, and throat specialist. Maybe I need one now. My throat is a bit dry. Anyway, so this is a rehabilitation that they've done. So the combination of these two buildings. Here's the building. The other one is on top here. So it's just got some more pictures down here. You can see this building is pretty much brand spanking new, very, very high quality finishing. So yeah, we're very happy with that. The process at the moment is that we are now in negotiations with the developer, and yeah, obviously we got 1 or 2 bridges to cross still, so I can't make any promises, but it's definitely looking very promising. Figure-wise, you can see the internal rate of the return of the project is about 21%, and the equity raise is going to be about 4 million. Debt coverage ratio, you can see here is 1.8. So it's a very, very strong income ratio here. Cash on cash is also quite nice. It's about 9 to 10%. So there's a bit of optimization that must still happen here. So we'll look into that. But our first pass on this deal looks promising, and we will now refine it hopefully in the month of May. And as soon as medical file are pretty much done, then the likelihood that this will come online maybe in June is most likely. So also very nice about this developer, he can shift the project up and down for us. So we're not dependent on absolute timing. So we can first do medical 5 and then add on to medical 7. Yeah, I think these things I've repeated again, very clear. It's a landlord-friendly state. It's a growth state. It's in the growth and expansion corridor. Very large established groups that are the tenants in both buildings. And for us, it's very important that the developer are actually going to stay on as a sponsor. That means he will stand surety for the debt, which we as foreigners cannot do. And he will maintain at least about 10% of the equity. So that is for us an absolute plus, because now not only is sponsoring the debt, but he's also got really a lot of skin in the game, and that's just good for us, you know. So from an investor perspective, this is almost a perfect deal. So again, the same story. This will be the second deal. If it gets through the due diligence, it will basically be offered for both the LLCs and the platform side. Okay, and then we've also started looking at our first deal. I just want to quickly, sorry, I didn't put it there. I just want to go back to this one slide on top here, just to show you a little bit about where the deal are. Sorry, excuse me, I just want to go back. So in this Texaplex area, this where Plano is, that northern side is really an absolute growth corridor. This is reckoned the most developments in one town at the moment. It's called, they call it the $5 billion mile, and that is the area where this project is located in. Oh, I just want to scroll back to that specific project.
While you're scrolling there, Machiel, I have just launched a poll in terms of Medical 7, and there's a question here in terms of Texas asking, is it the same as Atlanta in terms of licensing and location, where the location has a license, or is it not?
Yeah, in Georgia, there's a specific license which is called the Certificate of Need, and the Certificate of Need is licensing the equipment in the building to the building. So it's not actually the doctors, it's actually the facilities are licensed to the building, and therefore the doctor that owns a facility or rent the facility can't move. So that's the, let's call it the peculiarity that we see. The peculiarity is really just in Alabama and Georgia. Currently in Texas, there is not such a ruling as we have seen in Georgia.
Okay. And just right. The joke, Clive asks, what happened to Medical 6?
We just like to count in twos, 3, 5, 7. No, I'm just joking. The Athens deal, if that comes through, that will be Medical 6, and Medical 7 is the Austin deal. So if Athens still continues, then that will become Medical 6.
Okay, great.
Right. In the Dallas corridor, like I mentioned, the Frisco is really our first, let's call it office block. These are high-end office blocks in that very high-growth corridor. From our perspective, we are going to really use an external sponsor now, so that's the process that we're busy with. They are constructing the buildings as we speak, so this would be not a development project, but it will be a project where we buy the buildings on completion. So our problem at the moment is really that we need to find a sponsor here. In this case, the developer is not a sponsor and he doesn't want to be because he's doing a lot of developments. But this area is so attractive and it's so buoyant in terms of pricing that it's really a market that we want to be in and be part of. This developer, a guy called Philip Carter, he's actually got a pipeline of almost $500 million worth of projects. So this is a very senior partner that we want to be part of or to work with, and that's why we started this. We visited similar sites, sorry I didn't have a photo now here, where he is really developing extremely high quality buildings. So we've actually seen the ones that he actually completed, and we are just so impressed with the building quality. And these units are pretty much pre-leased halfway through the construction process. So it means that we will get a fully tenanted building. And then very interesting, he doesn't have a tenant installation here. He just does the installation for the tenants all in one, and it's all part of the price. And it's also triple net leases. So yeah, very, very attractive segment of the market that we want to do. But it's really dependent if we can get a sponsor. If not, then unfortunately we will not be able to do this deal. Right, and then what my colleague Ricky is doing at the moment, we have a lot of investors that wants to invest in houses, but maybe money is a bit tough. So we're also going to put on packages of houses, typically 10 to 20 houses in a single package, which we're going to offer if we can help it every second month or every month. So yeah, there's a lot of clients that don't want individual houses. They want, first of all, perhaps to invest in a smaller amount, and they also would like to invest in a diversified property portfolio. For instance, if you buy a single house and the one tenant goes away, then you have a vacancy for a month or two. But if you buy the same amount of money in this packages, your risk are spread over 10 to 20 houses. So from that perspective, it really would make a lot of sense to have a more diversified product than a single residential house, and don't have the hassle to manage it. So we are investigating that. We are looking in specifically Texas and the Memphis, Nashville area. Both of our partners there has the ability to buy these houses. So pretty much they're going to buy 10, 15 houses, rehabilitate it, and put it pretty much at cost price into an LLC. And then we will then buy through our platform the actual investment. So this investment is really going to be focused for the platform, and direct LLC investment in this at the moment is not planned. But let's see. This is a new product development that we're busy with. We're very excited, and we're rushing like hell to get this done, hopefully in the next week or two. We're actually seeing the houses now on the strip. Yaku has been in Memphis and Nashville. He also has been in Texas, Dallas, and myself was also in Texas, Dallas, looking at these houses. So all I can say, it's pretty high standard houses. It will be a low A class, high B class houses. So we want pretty much a little bit the higher end type of product that we want to do here. And so from that perspective, it is important that we look at that very favorably. So yeah, I think please let us know if you're interested. We would like these investors that's interested in it, we'd like to contact them and also ask them specifically how we can structure the product a little bit better, and what is important for them from an investor perspective. So please vote if you're interested in this, and we'll definitely want to have a quick chat with you and see what is your preferences and how we can do it. So Kevin, are you going to take up your December money and put something in here?
That's definitely the aim. I having been here with Wealth Migrate now for, it's almost coming on a year. I'm not like you, Machiel, who bought and then became an employee. So it's definitely where I'm looking to, because all my properties currently are in South Africa, and I definitely realize that diversification is important. And so the fact that I can now invest at that lower level and don't have to buy an entire house myself, it definitely puts me into that market. So I'm very excited. Yeah.
Sounds good. All right. So let's continue with the. So Kevin, is my screen back up?
Yes, it is.
Okay. All right. So I think that was just a brief overview of the opportunities that we're really looking very seriously on. I would like briefly just to discuss the other market segments other than the medical and the office blocks that we are looking at, just to give you a feel of the other segments that we are investigating. So we aim to not only offer medical products, but we would like to later on offer additional products. We had quite a few requests also to look at other segments. The first segment that I want to discuss is the multifamily segment. We did a small experiment with this project. It's called Cold Creek. It's in Austin. It's a two multifamily complexes. The one was 300, the other was 204 units. And we had the chance to add 700,000 equity. So what's nice about this, this is the PPA group. They are specialists in buying underperforming multifamily units, refurbishing them, and then pushing the rent up. And it's a very short focused 3-year turnaround period, and as you can see, the returns are higher. So we tested them, and so far so good. Obviously, for us, this is a new thing, and we just want to make 100% sure that this developer and what he says he does works. The key thing about the multifamily is that you can just imagine doing the rent roll for 504 properties. So the PPA group that we got introduced to, incidentally, by Joyce Schaefer, our PR lady in Austin itself. She actually was the commercial director, or commercial broker, can I say. And yeah, so we got a very good reference. We checked the references out. So we're just waiting for the next opportunity. So this is definitely something that we're looking for in the future, especially if we can find a rehabilitation 3 years. So the strategy with this type of properties is really to boost you in the short term. Of course, you have to pay tax on that gains, but I mean, that's the least of your problems. At least you're making the gains. So these are quite exciting opportunities that we see. As you remember, the cap rates are becoming quite low. The other opportunities is the retail opportunity, which we're investigating. It's a group called Victory Group in Dallas. They're building these small strip malls. Yeah, so we're investigating them. We're also learning if they would work to work with us, if they have a good price points for us. And then the other thing that we're busy doing on the investment committee, Henny is driving that we are getting specifically retail experience onto the investment committee. The reason for that is that we want to make sure that we got extreme experience on the investment committee, that we value these type of deals. So we're busy getting that on board. And in terms of medical and multifamily, we've got the expertise already in-house. So the retail side of things we need to look at as well. The other opportunities that's coming to the fore is self-storage. For those that have seen Storage here in South Africa, quite a successful company that's just bought up almost all the self-storage in South Africa. So from that perspective, this is something we're really looking. We found a developer that has a pipeline of about 4 of these projects, and these are pretty much cash printing machines. So from that perspective, it's quite an interesting option. So these are the, let's call it the 3 new segments that we're looking at. In terms of the multifamily, at the moment there's not, I see there's a question here, there's not in the moment available investment, but we should have very soon investment. Then I saw, Andrew, you asked the question, when will the next opportunity be? Anything on the horizon? I think I've shown you quite a few opportunities. So the next opportunity would most likely be the Austin medical opportunity, and there is potential of the multifamily opportunity and potential of the retail opportunity. So yeah, I think there's at least 3 opportunities very, very shortly. And then so I think we would like your feedback on this, just to see what people's interests are. Of course, we see it from purely a figure and a performance perspective, but it's also important that we'd also like to get feedback from you as investors. What would you really be focusing on? We've had a fantastic run so far with the medical opportunities, solid returns. Things are really working out there, but we want to expand. So from our perspective, our number 1 focus remains the medical opportunities. We're definitely going to add a lot of housing packages. So for me, the first 2 on your screen are pretty much a given. But the new ones, the new kids on the block, as I could call it, the retail and the storage and the multifamily, at the moment, that is something that we want to look at. From our perspective, if I compare it in terms of the three options at the bottom there, the multifamily, in our opinion, is pretty much by far the most attractive when it's, let's call it, secondly after the medical opportunities. So we definitely want to look at the multifamily. The retail opportunities are tricky in the sense that you really have to get your tenant mix and your retail mix really correct for the area, and that's a very specialized area. The multifamily is really driven by job creation, and if you can position it in the, let's say, the upper end of the blue collar and the lower end of the white collar workers with a growing population growth like we just saw in Austin, it's almost a no-brainer that multifamily will fill up. And then very interesting, the guys that's doing the storage units says they actually put the storage units very close to the multifamily units. So it means that the guy that's in the multifamily space, you know, could actually store his stuff in the storage unit as part of his rent and stuff like that. So it's a very interesting combination of the two. Yeah, so thanks for the poll. I think we pretty much clear. It looks like very clear. Most people are thinking of the same, that the multifamily office is definitely second after the
medical opportunities.
Yeah, medical opportunities, and yeah, interesting enough, not such a lot with the housing package. But anyway, let's see how it turns out. I've got a question here. Multifamily only by LLC? No. When we do the next opportunity, it will be LLC and or the platform. So very important is that we want to use the platform, and later on, if possible, only the platform. It's really much more efficient for the smaller investors, and also when you have an international diversification strategy, it's nice just to have a single place to invest in the three destinations: Australia, UK, and America. Yeah. All right. So the last opportunity, for those that don't know, we still have the EB5 is still on the cards. Very, very favorable program. We've got actual persons that we know now that's gone through the program. I've met with one guy in Texas. He's also now invested with us into Medical 5. So he's actually living in Texas already, based on the exact program from the Gold Coast Regional Center. So yeah, this is one of the only EB5 programs that we found that actually give you an investor return still while you're getting your green card. Most other EB5s are only about 1 or 2% and doesn't really give returns. So guys, if you're interested in immigrating, but this is serious immigration, you can't do this for I just want to have a plan B. You should plan for it and do it. So it's quite expensive. The other thing is that, you know, if you're interested in that, you must act pretty much before September, October. We have the potential of that 500,000 going up to 800,000 again. We had the same scare last year, but fortunately that did not work. That didn't go through. So from that perspective, it's still another year at 500,000 for those people that is interested. Yeah, I think just type in your name. I see there's 1 or 2 guys that wants to have the details. I'll send it through. We got a nice little flyer. The best thing is that once you're interested, let's just give you a consultation with Stuart. He's our guy locally in South Africa. It's pretty much all over the country, and it's just a question. If you want some more answers, we just, we'll just do a quick consultation, no strings attached. It's actually very efficient. All right, thanks, Kevin. I think let's move on. And then I think I just want to end off with, guys, please have a look at our emailers and website. We're very far down the line with the SHRM side. Yes, it's still under negotiation. We're in our final negotiations yesterday, today. So I don't know yet the outcome. Hopefully that will be good. We have our investment committee on Tuesday this week, Tuesday next week, and then hopefully if we get the final nod, then hopefully we'll have our first Australian development. I know this was this is a American webinar, but I think we're pretty excited that we also have Wealth Migrate opportunities. We're also going to do this opportunity through the platform, so there's no need for trusts and all these other structures in Australia. These ones will also be directly off our platform, which just makes it quite easy for the investors. And one thing that we're busy with, obviously, is to get formal tax opinions on that. So we're busy with the tax opinions and the actual developer negotiation, and hopefully in the next week or two, we will be able to launch that. Yeah, so Kevin, I think from my perspective, we're pretty much clear. I just want to quickly talk about the platform. The platform is really live, so we're so excited about this, guys, that it's just awesome that we have the ability now to invest into 3 continents without setting up any structures. It's just unreal. The software is integrated. That means that when you go on the line, when you do your first investment, you will actually get an online trading account, and if you invest in the different currencies, you will have the different currency trading accounts, and then you can obviously do with that money when we pay your dividends back and your returns back, and you can reinvest or take it offshore to your offshore account if you invested from that offshore account, or you can, if you've invested in your personal capacity, just take it to your personal side. So in terms of Sherm side, what the minimum investment amount will be, I've just got another question here. I think we haven't determined that, but it's pretty much going to be in the region of about 15,000 Aussie dollars and something like that. So we'll determine that very shortly. All right, and then I think the other thing, maybe just a quick thing, we're busy with an underwriting fund. If you know of people that's interested in that, that basically means we're going to fund the deal and then crowdfund it. Currently, we are crowdfunding it while we do the deal. So just help us to put more deals more quicker onto the portal. So the person that will, or the persons that are interested in this are typically for large investors, and the idea is really that they could get a bit of a return, typically in the region of about 10% while we hold the money for short term. So it's a short-term product for large investors. So we're just developing this concept, so just be aware of that. So if you see that again, I think I don't want to go too much into that. That's really, if someone is interested, that's really direct discussions that we need to have. Yeah, Kevin, I think hopefully that is that's a bit of a mouthful for everybody. And maybe we should just give I think we're pretty much on the hour as far as I could see. Yes. So I'm very happy with the timeline, so that I know people's time are very precious. Absolutely. And hopefully they got focused feedback from us. Yeah. And yeah, maybe I'll give some chance for some questions if there is. So please type your questions in. Let's have a quick look if there is some specific questions. Yeah, and then I think we can end off the
yeah, I mean, of course, other than that, it's just always keep your eyes open for anything that comes through in terms of emails or communication in terms of other webinars and events that are happening. We do have some exciting things happening in terms of Freedom Day, and as well as in the month of May, with a number of webinars that we will be holding on a weekly basis. So just, yeah, as I said, keep your eyes open. We will be sending out communication with regards to that. But otherwise, I do see there are a few questions coming in here.
All right, so I think when will the funding start? So the first investment date for the Medical 5, we will be going into pledge pretty soon.
You mean into live?
Yeah, sorry, into live mode. We're planning to be there hopefully in first week in May, so then we can actually start the funding. So that means that we want to fund pretty much by the end of May, beginning of, we'll say mid-June latest on Medical 5, so that's a very focused approach for us. We already got at least, I think, about 40% funded. So please, if you're interested, don't delay. The people that has pledged now will obviously get first start or first opportunity to actually invest. Yeah, so I think that is the one, and then as soon as the other opportunities comes available, we will put them on. Yeah, I think I just see there's a potential for a vulture fund. And Andrew, I think that is something that we are working on. Just a quick feedback is that we see on the news the CBS loans are coming to maturity. These are the loans that that will cause the problem during the GFC. A lot of these loans are coming to maturity now. It's 10 years down the line, and a lot of people have got too much money and they can't support the repayments with the current market evaluation. So from that perspective, there's quite a lot of opportunities coming with distressed properties. So we've actually seen a little bit of a little small GFC already on the CMS loans happening, and yeah, the potential for a vulture fund is definitely going to be there. And we are thinking of using the underwriting fund. The underwriting fund is a large fund. We're talking anything from $2 to $5 million, $2 to $5 million in small sides, and we're actually thinking of more to the region of about $50 million. So it means that we can take down or fund the deal almost immediately, and if there's opportunities at auction or foreclosure, we can use the underwriting fund to bring that opportunity quicker to market. And the advantage for that is that we will have the ability to buy at a lower price in this current, quite, I would say, not hot market, but there's a lot of money around buying properties at the moment. Yeah, so I think just to answer, yes, the webinar is going to be recorded. Once we've done with the webinar, all the people that's on the webinar and has registered will get an automatic link to the recording. Yeah, so that's where we are. If you pledge, you have to obviously, as far as possible, keep your pledge and continue with the investment. I've just got a question like this. So if you really can't make it, it's not the end of the world. But if you pledge, you should be pretty serious about the investment. But if you're not sure, but you want to wait 1 or 2 weeks to just clarify your own position, please pledge. And then if you really can't make it, then you will not be held to it. And it's very important for us to see how much people are pledging. And we had on Medical 3, we had an oversubscription situation. So we'll have an oversubscription situation most likely, and then it's really a question of the people that's going to move their money first that will get in. We obviously will make the portal available to the guys that pledged first, so that they actually have an opportunity to get into the deal. And if they don't follow through, then people that hasn't pledged but can invest, then will have the opportunity. Yeah, so that's what we try to be as fair and possible, and really reward the people that's taking action early on. Okay, Kevin, I don't see any further questions. I'm pretty okay. Yeah.
Great. Right. Thank you very much, Machiel, for the comprehensive analysis that you've given and everything that to show what's coming. It is very exciting to see a bit of diversification as well into different areas, which really is exciting. And we look forward to all of these on the portal and getting through the investment committee safely and securely.
Yeah, no, I hope so. But I think it's important that the investors can see that not all the deals are going through, and we're sticking to our guns. That that we want to make 100% sure that whatever we present are proper deals and sound deals. It's definitely absolute priority for us. So bear with us if something goes through or something doesn't go through. It's part of the game. It's part of the nature of these projects. And all that I can say is that we've got a very powerful investment committee. We're expanding it now. The due diligence teams has grown. As you can see, there's a lot more deals that we have to do. And it's really becoming quite a nice team effort with our local partners and our analysts and our investment committee. We also getting external investing committee members really to complement our experience. So all I can say that we're very focused on delivering quality products and things that we can invest in. If you think about it, most people, $1 million or 2 million rand is a significant amount of money, and we don't want to mess around with it.
Yeah,
all right, thank you everybody.
Thank you very much, Machiel, and thank you everybody for being online. As we have said, it has been recorded, and we will be sending that recording out. And thank you very much, and enjoy the rest of your evening. Cheerio, everybody. Goodbye.
Bye-bye.